How many of you were here during my earlier presentation? Oh, geez. Okay, well, I'm going to spare you the my ramble on about silver prices. You know, I think it was very useful. I think there was a lot of good information in the meeting. But despite that, I'm going to introduce Mani Alkhafaji to you. He's right here. He's my second in command. And he's a big help to me. And he runs our M&A team. He's VP Corporate Development, as I said. And he'll do a much better job presenting than I will. So I'm going to, you come up.
Great, thanks.
Okay.
Well, thanks, Paul and Keith. I'll give you guys a quick update on First Majestic, and I'm sure you guys all know the story. But when it comes to First Majestic, you know, it's really hard not to think about silver and vice versa. You think silver, you think First Majestic. And there's a number of reasons of why that is. I'm not going to go through that, but we do, you know, work quite hard on maintaining our silver purity. And I'll show you a couple of charts of where we stack compared to the peers. Keith put the company together, you know, more than 2 decades ago, and we're a trusted name. You know, we focus on talent, we focus on growth, we focus on innovation, and that doesn't change. We've proven ourselves with accretive acquisitions, with like Gatos, for example, but we've had a number of acquisitions over the last 2 decades. Paul mentioned the beta silver, and that's real. You know, we do track very closely to silver. You know, when it goes up, we do quite well. Unfortunately, when it goes down, we obviously have that same leverage, but it's trending in the right direction, so we're clearly very happy and pleased with that. Keith touched on the macro piece earlier. The key takeaway from here is, you know, supply is flat, and that's true. You know, we're making acquisitions, we're consolidating, but we're not really adding new supply to the market, and that's been the case for the last 10 years. Demand, on the other hand, is expanding. You know, we need a lot more silver than what we're currently producing, and that's not going anywhere. That's not taking in account future industries that's going to consume and require more silver. You know, nuclear renaissance, AI, and the photovoltaic industries, they're just consuming a lot more than we have, and there's just no more coming online that's gonna change this. Just as a reference, the official 2024 deficit was 150 million ounces. First Majestic produces 15 million pure silver ounces. So we need 10 brand new First Majestic to come in right now to bridge that 1-year gap. And it took us 20 years to put this company together. So let that sink in for a minute. On the company, you know, we own 4 underground mines in Mexico. We're blessed with having a significant land package around these assets. You know, we've seen dividends from these investments. We have ability to explore and add discoveries and add ounces. We're really, you know, we're really happy with the portfolio right now. I'll show you guys what it looks like in a second. And something unique to First Majestic and really to the industry, we're the only mining company that owns and operates its mint. That's, you know, that's our own silver coming from Mexico, being refined and now minted in the United States, and we sell it to customers, and it's done, you know, amazingly in the last couple of quarters. You know, when it comes to ESG and sustainability, this is nothing new to the company. We've been heavily invested in the communities. We view the communities as partners. Without the communities, you don't have the mine, and vice versa. You know, we invest in farms, agriculture, wastewater treatment facilities, and that hasn't changed. But what's changed in the last couple of years, we've improved our transparency and our reporting, and you're seeing that now reflected with, you know, reputable names that track the name, whether Sustainalytics, ISS, or the S&P Global. So we're very proud of what we achieved, and you know, we'll continue reporting on the good things that we're doing with these communities. Just some, you know, some trends for the last couple of quarters. You know, 2024 was really a transformational year for the legacy assets. You see, every quarter we've had a step up in production. We fixed labor problems at San Dimas. We've resolved labor or water issues at Encantada. So that we ended the year at a fantastic note, and then comes 2025. In January with Gatos, closing the largest transaction in the company's history. And you see the bump up in Q1 and then Q2 and Q3. it's been really the gift that keeps on giving. Doubling our production basically in 1 year is no joke. Costs are coming down, and we're really happy with what we've done. And the next chapter of First Majestic. Our guidance we've updated in July. You don't see companies increasing their guidance. We did that. We bumped up our guidance by about 7%. So we're expecting a stronger year in 2025. We're shooting for about 30 to 33 million silver equivalent ounces, about half of which is pure silver, and 1/3 is gold, and the balance is lead and zinc. Healthy cost, so you can imagine the margins with these prices right now. This is the chart that I was referencing. We're currently sitting at about 57% of our revenue being driven from silver, and that's only going to get better as silver prices improve. So that's the direct leverage that First Majestic can offer. We measure ourselves against a number of peers, and these are peers kind of around the same size as us. Some of them you really question why they still have silver in their name. To be a relevant silver company, you got to have at least 50% of your revenue coming from silver. This goes to show how hard it is to maintain that. We'll go through the financials a bit later, but one of the highlights here is really our treasury. We have just under $570 million in the bank, and that's a fantastic number for a company our size. And this treasury balance keeps growing, and it's a new problem that we haven't had in the past, capital allocation. So we're obviously having a lot of conversations. How do you distribute that capital? We do pay dividends. Keith mentioned about potentially increasing the dividends in his earlier presentation. We've done share buyback. So we're actively monitoring and reviewing what to do with the position. From a high level perspective, 4 mines in 4 adjacent states in Mexico. That gives us a lot of synergies. We're able to move people around. These are arguably the most mining friendly jurisdictions or states in Mexico. We obviously established infrastructure there, so it's easy moving people around, equipment. That's in Mexico. Our head office is Vancouver, and we have our first mint facility in Las Vegas, as you see to the bottom right. Getting into the assets, Gatos is the real deal. It took us about a year from the initial conversation with management to when we closed it. You can imagine it was a very competitive process. There's about 13 companies that was looking at Gatos, competing against us. So we're very happy that we were the winning bid at the end. We closed it officially January 16th of this year. It's a fantastic asset. It's really hard to explain it. You look at the mill over here. That's one of the most modern mills in Mexico, heavily built. They spent over $300 million building this. Something that we probably wouldn't have done, but we're happy that it's there. Now it's allowing us to expand and do a lot more with it. But what we really like about this is a district scale asset. It comes with 103,000 hectares. That's massive, for this operation. It's tough to really see on the slide, but that tiny box in the middle of the map, that's a CLG. That's 10-year life of mine. That's all the drilling that's been done here. Everything else, that's zero exploration's been done. So you can imagine over time, we're going to take our time exploring this and adding more ounces in the ground. But we have the ability, and that's what we like about our assets. They're district scale. We're able to do a lot more with them. Moving on, Santa Elena, that's another great example. We bought this mine 10 years ago, and it was doing about 2.5 to 3 million ounces. You look at 2024, we broke through 10 million ounces. So we quadrupled the production size. 10 years ago, the mine had 7-year life of mine. Right now, it has 8 years, 10 years later. So that's, when I say district and the ability to explore, that's the reason behind it. We can expand. We're not going to go and drill everything and put 25 years on paper. Every year, we're going to explore and just replace the ounces that we're depleting. But this mine has truly been the gift that keeps on giving. This is the land scale as well, 102,000 hectares. Just for reference, that black box at the top, that's what Core Mining bought for $1.7 billion. First Majestic surrounds them. So that was Silvercrest, but the green box and the yellow box represents the land that First Majestic has. We've made a couple of interesting discoveries, big discoveries really in the last, within the last 18 months. Navidad appears to be one of the largest discoveries made in this district. We continue, we're defining it. We're putting more rigs. We're really trying to see how big this discovery is. But our geos are quite excited. This is going to add a lot more ounces and a lot more life of mine for the future. We've made another discovery about a year after the initial discovery. This is called Santo Niño. And now it's giving us a lot of flexibilities in really planning out what the next growth of leg growth will be for Santa Elena. So you can imagine this district will be around for years and decades to come. Moving on to San Dimas, that's our third district, really. So San Dimas is one of the most important underground mines in Durango, arguably in Mexico. It's been around for over 250 years. I should have said the other ones, or Santa Elena was doré. This is a doré producer as well. It produces about 50% gold, 50% silver. Robust producer. It is our largest mine, and it drives the business quite a bit. We've had labor issues I mentioned in the past that since has been resolved. So you see production is improving now quarter over quarter. It comes with a big land package as well, 72,000 hectares. Similarly to the others, we're able to explore, add, and expand production over time. The mine is currently doing about 10 million ounces. We view this mine as really should be doing about 13 to 15 million. It is our largest mine right now, but we really think that this thing can do a lot more, and it's really going to be a product of exploration. We're putting a lot of money in exploration. We had a record 2024, a record 2025, and we're working on the 2026 plan right now. We're chasing tier 1 veins here, and this is really elephant land. Like this is the Sierra Madre Continentals in Mexico, very prolific part of the region. Encantada is our smallest mine. It's been in the portfolio, again, the longest. We've had it for 20 years. For 20 years, it's had a 2-year life of mine. So this is really the mine, again, that keeps on going. These underground mines are pretty interesting that way. Encantada is 100% silver, which you don't really see. You see a lot of mines with byproduct, but this makes it quite unique to us. 100% doré, 100% silver, and at these prices, it's making money. We do anticipate, or we forecast costs to further improve. We're optimizing operation there. We brought in a new contractor, so we're seeing some benefits. Ending Q3 and now in Q4 is looking pretty interesting. Our most exciting probably part of the business is the minting facility now. We're a mining company, but now we're obviously into the minting business. We had to learn quite a bit, but it's been fun. It's been exciting. We've learned a lot, and it's making money. We've had a couple of quarters back-to-back, record sales and record revenue for price and ounces going through it. We've done about 7% of our production through this facility. Our goal is to get it to 10% for this year, and ultimately, the more we can get through this, the better. We're charging higher premium than spot, so it's obviously contributing to the bottom line. But again, it's something that differentiates First Majestic, something innovative, something that we're proud of. Balance sheet has never been stronger. I mentioned the cash position, but we have marketable securities. Our liquidity is just under $700 million, which is fantastic, not including a restricted cash position. We do have some positions in some juniors, which have done very well for us. We're happy to hold them. From the stock perspective, I think the highlight here is how liquid First Majestic is. We trade about $200 to $250 million every day. The stock basically trades 100% of the float every month, and that's a fantastic, KPI for us. It again makes First Majestic an attractive investment opportunities for institutions, for retail, and again, Keith obviously has built a reputation that we're benefiting from. People know the name, and that's the product of that. We pay dividends, so it's 1% of our revenue. It's modest, but we are contemplating increasing that as we get a bit more comfortable with the balance sheet, with the cash flows. But that's we're happy paying dividends, and like I said, we'll likely be increasing that. And some of the catalyst really is exploration. We're putting a lot of money in the ground. We have been providing updates. We'll be providing more updates as time comes. The integration of Gatos, I should have touched on, is virtually complete at this point. That's been one of the smoothest transactions that we've closed. So we're really just benefiting now from the cash flow, from the production. And there are still more areas that we're optimizing, but it's practically done. I think that pretty much wraps up the presentation. I wanted to leave some time for the Q&A. So happy for Keith or I take the questions. Go ahead.
Thank you for your presentation, and it looks very tremendous course. I I've heard in the last time there are some concerns about the lifetime of Gatos, but you said now it's 10 years already without further exploration. So why came these concerns? Because 10 years is great.
Yeah, like I haven't heard Gatos, but there's always questions on life of mine. What people fail to understand or realize that underground mines are very different than open pit mines. You know, these mines, they're vein, so they go and you can't really know how long they go. I told you an example with Encantada. You know, on paper it's 2 years, but we've had this mine since 2005. So underground mines are very, just differently measured. As long as you're able to explore and drill and have the ability to do that, life of mine is really not a concern. Good.
Have you considered selling your little property that you bought in Jared Canyon to leave it behind you? I think that maybe holds the stock back.
Yeah, so Jared is a nice option to have right now. You know, we don't get any credit for it anymore. We obviously, there was a lot of questions and we did get penalized when we shut it down. But right now, there's definitely a lot more interest in it. You know, gold assets in Nevada when gold is all-time high we're obviously looking at that now. We finished Gatos. Gatos took a lot of time, so now we're shifting focus back to Jarrett, and we'll be providing updates. You know, there is plans. You know, you can imagine we're getting a lot of inbound inquiries about it. So nothing is off the table, but we'll be providing updates over time.
Okay, Manny, we have to wrap there. So
Sure. Yeah. No worries. Yeah.
Manny and Keith, thank you so much. Thank you for suggesting.